I will just first of all say thank you to Independent Hotel Show for having us to speak this year, to give you a quick update on how's the hotel industry been doing across the country. Just before we start, just a little housekeeping. I'll start you off. My name is Michal. I'm the Senior Manager for UK and Ireland and STR, and I've got Ingrid here with me, who's our Account Executive for Scotland, London, and Channel Islands. So a lot of independent hotels on her hands. She is here with me. Ingrid will start you off with some insights on traveller sentiments. How do people feel about travel? Why do they not travel? Then take you through Europe and start off with the UK, and I'll take over and finish off everything with slightly more positive news with ADRs and recovery and all of that stuff. So off to Ingrid for some of the little more difficult stuff.
All right. Hello, everyone. So as Michael said, I'm Ingrid. I look after some of you at some of the markets in the UK. And what I'll be doing is I will first take you through context. Context is very important, especially when looking at numbers, at data. There is always reasons behind the numbers, and that's why it's always important to actually set the stage and lay ground to what's happening, what's been happening. And my first slide, which I'll go quickly through, is setting this stage on surveys that our colleagues from Tourism Consumer Insights do. A lot of things that they do is look at news. They do the survey quarterly. The latest one that was actually done was in July and August, and we had a total panel of 1,168 people. 60 countries participated in that survey. 74% of them would be UK and North American respondents. And one of the first things that we saw, and it's the difference between international travel and domestic travel. So something that's been really a driving force behind the recovery has been our domestic demand. We've all rediscovered our backyard. We've all staycation. So that's been really, really positive to see. Locals pushing the performance upwards, but we've seen over the next, the few months, this year especially, this domestic demand going, slightly down. Reason being travel restrictions, COVID wave subsided, a lot more travel. So people that were asked this question, they were asked if they were undertaking whether domestic or international. And while at the beginning of the year it was more around the 20% of people who would go on an international trip, that has gone up to 30%. So more people are thinking on traveling internationally. Now, mind you, we've also asked people from other countries than the UK. So that means there are much more people now that will be coming in. On the hospitality hotel themselves, properties, what we see, and it's very relevant now, so this was done in July, August, but like now more than ever, value for money is something that is very big amongst guests, and especially for budget hotel. They usually associate as well budget hotels to better pricing, but they do want the experience to go with that. Now, on the luxury or the upper categories of hotels, something that's very important to them is the full experience, food and beverages, cleanliness, and very recently as well, the environment aspect has been quite important. Now, loyalty is a big thing for upper categories hotel. They will come back if they've had an amazing experience, and they also look a lot at reviews. Now, going back onto costs, obviously we've seen what's been happening in the past few months, and that's something that now people actually take as impacting the decision to travel. Financial barriers is very much so among those people that have responded, something that they look at, whether they're looking at the cost of travel, whether they're looking at deals on hotels. Not so much now the macroeconomic. So if you look even like the COVID of what's been happening in Ukraine, so geopolitical concerns, that's taken a bit of a backseat. But on the contrary, the the money side of it has actually been quite important. Moving that to a bigger stage, so if you look at Europe itself, on occupancy, and you'll hear us talk a lot about index percentage change. So what we did is we looked at the data for this year, we looked at the data in 2019 because it was a good year, and we've actually just compared this data to see what has been the recovery. Just as well as, so 100 is pretty much what we've seen in 2019, anything below and above, and that'll give you an idea of what's been happening. So if you look at occupancy, looking at August data, and August is the latest monthly data that we've run. So on a year-to-date basis, we see that a lot of markets are coming close in occupancy to 2019 level. If you look at Edinburgh, if you look at Athens, Warsaw, those markets are 10 points above, and they're really coming to the 100 mark there. Now, part of this is leisure, extremely leisure-driven, lots of people coming in to visit. Usually that would be shorter term, shorter stay, and then moving on, but that's been really helping with the recovery. On the other end, you'll have markets like Amsterdam, Brussels, Berlin, which are doing rather good, but they're not yet there. Now, those markets are very much reliant to the corporate demand. And even here, we've seen corporate business demand coming back, groups coming back, but not as strong as it was before. If you really look at groups, for example, coming from countries like China, they still have restrictions. So obviously on that aspect, less demand coming in. If you look at the country, not just the market, but countries, and we're still looking at occupancy here, you'll see that from Q3 2021 up until Q2 2022, the actual occupancy, depending on the country, was between 20 to 60 points down. Obviously, we were still very much impacted by COVID, so that makes complete sense. But if you look at Q2, so February, March, you see an exponential increase in occupancy. As soon as the Omicron wave subsided, this has gone really much closer, and we're still looking at index. We're closing the gap, looking at 20 points to 100, which is positive. The UK leading the charge here, no surprise there. We've always done really well in terms of demand coming in. And you can see that from July on. On some weeks, some months, we actually went over what was seen in 2019. So very positive looking at these. And obviously, our friends from Greece, Spain, Italy, with a lot of leisure demand coming, also recovered during the summer. ADR, so it's not just green, it's very green. ADR has pretty much recovered. 10 points for lots of countries, 10 points above 2019 level. If you look at London, they're sitting 16 points above, Athens 36. So good to see that. Now, I know what you will say, there's not just ADR growth, but there's also anything that is related to that, economic factors. If you think about the shortage of staff that we've all felt, you're looking at inflation, which is very much a big thing here. And if you look at all these factors, fuel, all of that impacts the ADR. But you'll see with Michal later on that it's not just those extra costs. There is a real growth in ADR. Countrywide, you can see it's very blurred lines. So while in occupancy, you could really see this line on the 100 and countries getting towards that. On the ADR side, it's actually gone above on a lot of those months. Obviously, Summer in 2021 was, it wasn't just your typical June, July, August, but rather it washed on to September. 2022, we see a bit more of a pattern that was seen pre-pandemic, but overall, if you look at Q3 2022, most countries, well, all countries actually, that we looked at here are at least 10 points above 2019 levels. Class breakdown, because it's always important to look and to understand the sample. So at STR, we have more than 14,000 hotels Europe-wide that actually participate. And breakdown-wise, in terms of class, we have economy up until luxury, and without really much surprise, the upper classes and the luxury classes do lead the charge with ADR recovery. When you look at luxury class, it's 36 points above 2019 levels, but that's not come as a surprise, because while people in economy have been looking more at how much they will spend in their hotels, usually people coming to luxury properties, upscale, will spend the money to come, and especially now we have events that have come back, and that definitely drives the ADR on the upper side. But economy here is actually the closest in Europe to recovery on occupancy. They are just 3 points down. And you'll see later on, it is quite similar as well with what's happening in the UK. Now, onto what we're very interested to look at, which is obviously UK performances and what's been happening with independent properties and branded properties and the difference behind these performances. Looking first at the UK on the monthly occupancy, and we're looking at monthly occupancy, no percentage change, no index, pure data right here. Your lighter color being 2019, darker shade color is 2022. And while you see that the occupancy has not reached what we've seen pre-pandemic, it's coming very close to. And what's been interesting as well is if you look at January, we had quite low occupancy, but that actually caught up very quickly as soon as restrictions were off. Now, locally, restrictions would have been the different. Obviously, Scotland was later than the UK, but you can see the exponential growth here, going from the 45% overall to the 75-80%. July, August, and September have done quite well. We've had a really great summer. August is 3 points down to 2019 level, and it's pretty much the same as well with September when you look at September months to date. Now, I'll go through these two slides, so weekdays versus weekends. The first one with obviously occupancy, and then I'll get onto the ADR. But you can pretty much see the difference. I mean, we are hovering 2019 level. Here I'm looking at percentage change, so 15th of May to the 18th of September this year, and the same time period in 2019. Weekend, again, that goes with the leisure demand, much more recovered than what we've seen with weekdays. Business still not there, because we have very much so now hybrid work with now the economic factor. A lot of companies actually look at their budget to whom they will actually send to these meetings. So that's felt there. Now we have positive percentage change on some of the weeks related to events. The Jubilee was obviously we have the bank holidays, so that's been driving people as well to obviously book longer stays. ADR-wise, it's a different story than the occupancy. Well, the occupancy is up and down. You see that the ADR is very much positive. Obviously, weekdays is a bit of a laggard, but that is influenced because we still, despite the fact that me saying that business is still not there, it is there. And usually when you look at the rates difference, people that will travel for leisure do tend to spend more money. and business will have certain type of budget, hence you see the difference there. But overall, weekends or they're very much like in the 35% positive percentage change, 30% on average. So good performances there, especially for, but Q2 actually did well in catching up the weekdays and catching up with the weekend ADR. Class breakdown, so same exercise as we've done for Europe, and that's what I was saying. It's very similar pattern. The economy is pretty much, it's recovered. It's occupancy-wise and ADR-wise, few points above 2019 level, but really leading the charge is the luxury properties that have done really well across the board. Now, class breakdown, and also because I love my context, if you look at our sample, to the people that actually participate, we have about 4,150 hotels in the UK that submit data to us. Out of that, you would have an 85%, 15% ratio, with branded properties making up 85% of our sample. So that's to give you an idea. Now, if you look at classes themselves, we'll have more independent properties in the upscale, upper upscale, and luxury category. So hence why you will see in the next slides that ADR recovery for independent has been positive. Branded properties, they make up about 48% of the economy class. So that's to give you an idea of the breakdown. And then I'll get onto this slide before I hand over to Michael, but your green lines would be 2022 and the orange 2019. The dotted lines, which are above, which actually doesn't show as, they are above on both regional UK and London. So my dotted lines, which don't look like a dotted line, are just leading for both London and regional UK for 2019 and also for 2022 in terms of occupancy. And you're looking at daily occupancy rolling 7. So we roll the data so it doesn't show you all the peaks, which are very much related to events and seasonality. So the interesting fact here is London took a bit longer to recover occupancy than regional UK did. So regional always had a head start. Even from last year, we've seen that they've done extremely well. And that actually gives them the head start to start with about 30%, 25, 23%. And as soon as Q2 hits, restrictions subsided, that climbed up to the 75% with a really good summer overall. London took a bit longer. However, they remain really at this like high level of 75, 80% across the board. Now, the difference between the branded performances and independent properties is quite minimal. So as I said, on occupancy, branded have actually led, whether 2019 or 2022, but in regional UK, the independent have actually caught on during Q3, so closing the gap of difference. So you have about like between 10 and 20% difference in terms of occupancy, and on some, especially during holidays, school holidays, those bank holidays, this gap actually drew closer. And with that, I will leave it to Michael.
Thank you. So now, the context that Ingrid was giving about the split of independent versus brand and their class will be really important when you look at the slide. When you look at these slides, where I'm talking about recovery independent versus brand. On occupancy side, you saw that the economy and mid-scale hotels were recovering a lot quicker, and you will see that here as well. So the larger bubbles represent the branded hotels, and then the smaller bubbles represent the independents. And you can see that even here, on the independent side, we've seen a mixed picture in terms of recovery. In most markets, the independents actually recovered a lot better. Now, the other thing about independents is a lot of the independent hotels are smaller than the branded properties. So the occupancy recovery comes a little bit quicker naturally because they're smaller and they can fill a little quicker than if you imagine the Holiday Inns, the Premier Inns that are 300, 400, 200 rooms that will take a little longer to fill. So in all of the big markets, we've seen a very good recovery for the independent hotels, mostly above, with some exceptions above the brands. Now, if we look at some of the markets, some of the additional markets that are a little bit more leisure-driven, it is a similar picture here. Though in this case, we have seen the independents in these markets, in most cases, to be below the brands. Now, that will have something to do with the distribution of independents versus brand in those markets. But generally, very good picture, creeping up to that full recovery pretty much across the board. Now, the one thing that always affects recovery in ADR or growth, in occupancy or growth is always pipeline. And fortunately, and unfortunately, fortunately because UK is still a very attractive market for hotel investment, unfortunately because there are still about 120,000 rooms that are to come live in the UK markets across the country. Now, we're followed by Germany and Spain on a slightly smaller scale, but the UK still has about 120,000 rooms in the pipeline to open up in the next couple of years. Now, if we break it down to the big markets across the country and see what percentage of current supply the pipeline represents, you can see that it's a very mixed picture. Glasgow and Liverpool are going to have 1.5 times the supply once all of the hotels open. In London, we're hovering just about those 20%, though London is, in terms of number of rooms, the biggest supply growth market. The pipeline there is about 33,000 rooms across the market. Now, following on with a similar structure, and I can see that we've had the same thing here with the dotted line. 2019 versus 2022, independents versus brand ADR. Like we said, the independent hotels are more on the luxury, upper upscale and upscale side. About 50% of that sample is in those higher categories. So that's why you will see that those two lines that are on top in both sides, London and regional UK, are well above the brands, where the brands about 56% are in the economy and mid-scale, so then the actual rate disparity will be a little different. Now, looking at recovery, you can see across the country, again, following the trend from Europe, we have seen pretty much full recovery and growing the rate over 2019. The one exception are independent hotels in Liverpool that are hovering just under that recovery point, just being about 6 percentage points behind. But again, a lot more rate recovery at the independent hotels than at the branded ones. Again, looking at the secondary markets and the little bit more leisure-driven markets, very similar picture, but the independents are recovering a lot more rate than the branded properties do in these markets. Now, Ingrid did mention that it's not all inflation. We did look at that and we adjusted our index to nominal, so that's the total index for each week, but then also a real ADR index. So taking away the inflation, the growth in all of your expenses that you need to have when you're running a hotel. And you can see that as soon as we hit the summer months, so the July, in the branded hotels, we've started to see real ADR recover. So it is not eaten all by inflation. We are seeing real ADR growth on the branded side. Now, if you're ready for this, on the independent side, very different picture. We have seen real ADR recover a lot sooner, right at the beginning of the year, not waiting until the summer months when we were allowed to reopen. So real ADR has recovered at the independent side a lot quicker and a lot higher pace. Again, it is because we have about 50% of the supply in upscale and higher on that front. We've also looked at transient and group because that's a big topic everywhere we go when we speak at events, that, you know, groups are slowly coming back, but it's still not at the level of 2019 that we wanted to see. So you do have that there, the brands and independents, the recovery there is similar to 2019 and 2020, but it is the trend of we're seeing the transient grow, the leisure, the independent travel, rather than the groups that are still a little bit behind. Though we've seen in recent months that some of the group demand is coming back. We've seen a lot of the regional markets to have their events back, their sports events back, the Commonwealth Games in Birmingham, and all of these events are bringing larger groups or some groups back into the mix as well. Now, the other thing that we always talk about, that we collect, is occupancy on the books, or business on the books, whichever way you want to call it. So what we've done here is we've looked at the next 3 months on the books at the beginning of June. So for June, July, and August for summer. And you can see that we were sitting at about 30 to 40% on the books already booked across the country. Now, if we jump to beginning of September and looking at the next 3 months, the picture is very different. So you can see that the demand on the books has softened when traditionally September, October, November would have been very much events and conference season. Now, these big events are slowly coming back, like you can see here with the Independent Hotel Show, at a lot bigger scale than they were before because we don't have the restrictions. But a lot of these events are coming back slower or pushing to 2023 to make sure that they can happen at the scale that they want them to be. The difference between those two periods, so the summer versus the little bit more conference period, you can see that that's a very, very mixed picture, especially up in Scotland for Edinburgh, Glasgow. There is a little bit bigger drop in that on the books than we see in some of the other markets. Now, comparing the large markets across the UK, the one thing that's very exciting for us is to see that sports events, concerts, and other conferences are coming back and that they are filling the hotels in those markets. Now, in London, if you say Ed Sheeran's playing at Wembley, that's great. The Wembley hotels are going to be full, but it's not going to have a huge impact on the market overall because of the supply that's in the market. Now, if you say that Ed Sheeran's playing in Belfast, Birmingham, or Liverpool, I can guarantee you that there is going to be 70, 80% on the books 2, 3, 4 months in advance, and you'll be looking for rooms to book. Recently in Dublin, and that's one thing that we don't have on the slide, Garth Brooks was playing 5 nights in Croke Park, and the hotels were about 90% booked for all 5 nights. So that just shows that when these big events, concerts, football, rugby, all of that stuff that you have on there's boxing in Cardiff, all of these events are bringing that demand that we want to see in the hotels back and filling those rooms. Now, looking at something a little different, looking at recovery that we are forecasting. So what you have here is an aggregation of all the markets that we forecast across Europe. So we don't forecast every single market, but we forecast majority of the capital cities, plus Edinburgh, Glasgow, all the big markets in the UK as well. If we aggregate all of this, you can see that at Q4 2022, we are seeing RevPAR to recover. So though the occupancy is still behind in most markets, somewhere around that 10 percentage points mark behind 2019, we are seeing the RevPAR recover through that ADR growth already at Q4 2022, and that will just stay there across all of the European markets. Now, bringing in the UK markets that we forecast, so we've decided to use the nation's capitals, so London, Edinburgh, Belfast, and the regional UK, so that's the UK total excluding London. All of the markets that are out that we forecast are seeing RevPAR recover already before we even started the forecast period now. So our latest forecast was August. So from September onwards, we are seeing that that RevPAR growth. The quickest RevPAR growth that we're seeing is Belfast. And we've seen that ever since reopening of restrictions last year, Belfast has just had phenomenal performance. Occupancy was high, ADRs were through the roof, and they've just continued with that trend all the way through. If we pull in and compare all the markets that we forecast currently across the world, you can see the teal-colored bars. That's the UK markets that we're forecasting. And you can see that pretty much every single UK market is seeing RevPAR recovery by the end of 2022, with the exception of Manchester, where we've seen that recovery to be a little slower because the market is very corporate driven, and that's just not coming back as quickly as we would like to see it. Now, this is where I'm going to leave you guys. The only thing that I will mention is one thing that we've recently done. So a lot of you, if you know STR, you know that we have Hotel News Now, which is our news outlet. We have recently launched an EMEA section of it. So it used to be global, very US-centric. We have now separated that out to have a little bit more relevant Europe and Middle East news on there. So if you ever want to know what's happening, every 2 weeks you'll have an update in your calendar.